Welcome to another analysis video. Today we'll talk about another company in the footwear and accessories industry, but before we start, I want to remind you that this video is not financial advice and for entertainment purposes only. Also, I depend almost 100% on the annual and quarterly reports that every publicly traded company has to file with the Securities and Exchange Commission, because these reports have so much non-financial information in addition to all of the financial statements. So I downloaded and went over the annual reports from 2017 to 2022, and I also included the 2023 Q1 report to create this analysis report that helps me and hopefully you as well to learn more about this company and their performance. Crocs Inc., ticker symbol CROX, engaged in design, development, worldwide marketing, distribution, and sales of casual lifestyle footwear and accessories for women, men, and children. They operate 373 retail stores around the world. They reported their last annual report in a fiscal year that ends on December 31st, 2022. And the external accounting firm auditing Crocs have gave us the green light to trust the numbers in the financial statements. Next, let's check the market share of this company. Crocs has 5% share of the footwear and accessories market. This big square represents the $75.5 billion market for the 12 publicly traded companies in the United States stock market. And I agree that there should be more companies in this list, but probably they are private companies, so I don't have access to their financials. So this yellow square is Crocs' share from this market. Number 5 in this list is designer brands with a 4% market share. You can see it here in blue. It has a return investment ratio that is over 20%. And if you are interested to know more about designer brands valuation analysis, watch the video right before this one. Also, this big section of the market is actually Nike market share, that's 68% of the whole industry. Moving on to the next tab, Crocs have 4 operating segments that are also geographically focused. 46% of 2022 revenue generated from North America segment, 25% from Hey Dude brand, 15% from Europe, Middle East, Africa, and Latin America segment, and finally 13% from Asia Pacific. I want to mention that the Hey Dude brand is the only one that's not a geographic segment because it's a new segment in this year. Crocs acquired Hey Dude brand on February 17, 2022. Scrolling down, 51% of the revenue was generated from the wholesale channel and 49% directly to the consumer channel, which is the 373 retail stores. Now let's compare the revenue and the cost of sales for the past 6 years. The revenue did not decline in 2020, which is surprising, and there is a huge growth in the past 2 years, which is a very good news because that means that more people want the products of this company. The cost of sale is growing similarly to the revenue, which is another good sign, and I want you to notice the gray line, that's the net income in 2022. It is lower than 2021. In my opinion, this is the reason why the stock lost about 10.5% of its value since January 2023. Scrolling down to the free cash flow graph, we can say that the free cash flow is in the growth mode even if the 2022 is 2.5% lower than 2021. Now let's check the debt to assets ratio. It's 52% of total assets, which I think is a lot. And if I were the CEO, I would definitely work on reducing the debt, especially because when we compare the interest expense to what they are making, we can see that in 2022, Crocs only made 7 times the interest expense, which is, by the way, the minimum accepted in the industry. So if this ratio tumbles down further for any reason, in my opinion, the stock would shed so much of its value. Scrolling down to the outstanding shares, since 2019, the company bought back about 16% of the outstanding shares, which is a great news. But in 2022, they issued new shares that's about 6% of the outstanding shares, which is, in my opinion, to fund the acquisition of Hey Dude brand that I mentioned earlier. When we check out the dividends, we find out that Crocs has never been a dividend company. Now let's forecast 2023 numbers. We start with the revenue, and to have an accurate forecast, I look for a ratio that has been consistent in the past few years. In this case, I'm using the inventory turnover ratio, which basically means the company's sales performance by measuring how many times each inventory dollar was used to generate sales. Or in other words, how many revenue dollars are generated from one inventory dollar. This ratio picked up in the last 2 years, and I think we should assume it's only 8.5 because the inventory level in 2022 is too high due to the acquisition of the Hey Dude brand. In other words, the Hey Dude inventory is added up the first time with the original inventory. So using 8.5 inventory turnover ratio will give us $4 billion in revenue. Next, we need to look at the free cash flow. To be conservative, I will be using 2% lower free cash flow to revenue ratio than 2022, which means that the total free cash flow for 2023 is about $481 million. Using 5% discount rate and 5% return investment ratio, the intrinsic stock value is $148. And if we change the return investment ratio to 7.75%, the intrinsic value of the stock is about the same as the market price. In my opinion, designer brand stock is a better investment option for many reasons, like the debt, the dividends, and the high return investment ratio. Finally, I ask you to support this channel by subscribing because that's what motivates me to make more videos. Thank you and see you in another analysis video.